Banks do their part to spur the job market by hiring a lot of lawyers. Investor Beat starts now. Thanks for watching. I'm Allison Southwick. Impending U.S. involvement in Syria dominates the headlines again today. Unlike the last 2 days, however, the market is up. Oil prices hit a 2-year high, and Treasury yields are also on the rise, which means prices are down. Joining me now in studio are John Reeves and Taylor Muckerman. Our top story. The big banks are keeping lawyers very busy. JP Morgan is facing a possible $6 billion settlement with the Federal Housing Finance Agency. Merrill Lynch is paying $160 million for a racial bias lawsuit. One of JP Morgan's London whale traders was arrested in Spain. And to top it all off, we learned that the 6 biggest U.S. banks have spent more than $100 billion in legal fees since the financial crisis. So, John, of all the news I mentioned, what is the most significant?
So I think that $100 billion figure is the most important, and that's legal fees and settlements. So that's the whole thing. But it's a huge number, and it's getting bigger. So I think that the government and the SEC are getting more aggressive, and that there's a sea change right now. And I think the big Wall Street banks are put on notice that it's not business as usual anymore.
Right. So Taylor, with the banks, you look at all these lawsuits coming out all the time, and a lot of people say, don't even mess with the big banks, go small. Right. What do you think?
Yeah, well, I mean, I kind of have to scratch my head as to why investors have been pouring so much money into these big banks. $100 billion is a lot of money that could have been returned to shareholders had it not been spent on litigation and lawyers. So I'm kind of wondering how these banks have outperformed banks like SunTrust and BOK Financials, which are more regional, and they really haven't been exposed to a lot of this lawsuits that you've seen as the top 6 with that $100 billion.
Right. So then, John, what's your advice to investors when it comes to banks?
Yeah, so it's very tricky because in the near term, some of the big banks, particularly JP Morgan, Bank of America, they're doing well. I mean, their earnings were good, and I've seen some investors make a very compelling case that, hey, these are a good bargain right now in this environment. That having been said, long term, these aren't for me. I think that, these sort of practices could come back and hurt them over the long term, and I just think that the big Wall Street banks may not be the most attractive long-term investments, but I can see the case for investing in them in the near term.
All right. Well, that covers it for today's top story. Let's move to some of the day's movers and shakers. Tiffany is down after releasing second quarter numbers. They beat expectations with a 16% increase in profit. However, they are cautioning investors about the future. So, Taylor, Tiffany succeeded here where other luxury retailers like Nordstrom's and Saks failed. What do you think their secret was?
Right now, I'm not too sure it was a secret for them rather than just their industry. The diamond market seems to have done really well this quarter and all of this whole year. You look at Zales Corp also up big, over 20% today as they turn their first full year profit since 2008. You look at Tiffany's 16% growth in second quarter profit as well. So you could see a lot of guys and gals going down on one knee in the coming months, I think.
All right. BlackBerry is seeing a healthy little rally. The company announced that it is considering spinning off its messaging service. So, John, is this announcement really deserving of a pop?
At first glance, you wouldn't think so, right? I mean, BlackBerry has really struggled this year. The business is in trouble. The share price is down a lot. But it's funny. It makes sense as a business move. So I kind of get it. Whether that deserves the pop and whether that means now BlackBerry is a buy, I think that's a little strong. So I would say probably not.
Joy Global's third quarter earnings fell 5.3%. While they did beat estimates, the company lowered guidance for 2014. So, Taylor, what is behind the bad news here?
Well, you look at a 36% drop in orders. Because this company does rely on the coal market for 2/3 of its orders, you've seen global slowdowns in the coal market. China and India, the largest importers of coal in the world, but still there's oversupply in the United States and Australia as well. So I'm looking at continued weakness in this market on into 2014, much like Joy Global and Caterpillar, their largest competitor, the largest mining equipment producer in the world, issued lower guidance for the remainder of 2013 or a little bit earlier during earnings season. So I could see why they did announce that slowdown.
JCPenney is down again today. Activist investor Bill Ackman announced yesterday that he is selling his shares, and the market lost even more hope in the retailer. So, John, what can JCPenney's do to turn this ship around?
Well, let me first say that smarter people than me have not come up with an answer to that question. So I don't know. So maybe the first answer is not clear. I mean, the company's clearly struggling. But maybe secondarily, the current strategy makes sense to me. Is returning to its roots, double down on discounting, try to reconnect with the old traditional customers, and maybe just hang in there with the turnaround. And that's probably the best strategy they've got right now.
That covers it for today's news. And now let's look ahead. One stock on your radar.
I'm looking at Marathon Oil with all this turmoil in the Middle East, not just looking at Syria, but also Libya as well, the protests there. Marathon Oil is the largest U.S.-based producer with close ties to the Libyan National Oil Company. So I'm looking to see how these protests move forward. There were rumors that they wanted to sell these assets in July. That obviously hasn't happened. And they realize that there's still some worry here because they exclude Libya from a lot of their projections. So I'm looking to see over the next week, maybe not just tomorrow, but how this unfolds over the next week.
All right, John, what are you watching?
So, I'm keeping an eye on Facebook. And I think one of the interesting things is it doesn't seem that long ago that Facebook was just loathed by the analysts and Wall Street community. And now it's trading above its IPO price. It looks like it's getting some momentum on mobile. And generally now I think the stock is held in greater favor among investors. So it might be one to look at, take a second look at.
All right. Well, for John Reeves and Taylor Muckerman, I'm Allison Southwick. Thanks for watching.